We are back. Monday, May 15th. Sorry for not recording last week. Had some trouble with my son. He had some breathing issues after a nasty virus he got, so that's why we're a little delayed. But we'll get back on our Friday schedule very soon. And Jerry's back as well. Jerry, how are you?
I'm great, but make sure you tell everybody that Preston's doing fantastic now.
He's great. He's great.
Yeah.
He's back on the horse, playing, having fun, flirting with all the nurses, and me and mom are just getting back on our feet from lack of sleep. But we're good. Everyone's good, which is wonderful. Oh, just the joys of early parenthood, I guess. But
Yeah, it's physical now. It becomes mental later. And I guess it can always become physical. People can have issues with their health, but yeah, it's never ending.
never ending.
Kids, yeah,
Yeah,
always something.
always something. Fully prepared for that. But
If I'm in a
yeah.
good mood, you can always say, "Oh, your kids must be doing well," and I'll say, "Yeah, they are." Or if I'm in a bad mood, you'll say, "Uh-oh, what's going on? What's happening with the family?" It's always I wear my heart on my sleeve. But what was fun was watching, hearing how much people are enjoying this podcast. There's a few of our friends that kind of enjoy it, and somebody even mentioned the other day that there were binge watching.
Wow.
Yeah, that's pretty sad. It may have been Seth or I forgot who it was. Seth or it wasn't Oleg, but Oleg I think has been keeping notes and posting the notes on Twitter. So
Well, hold on. He's posting your notes.
that's right.
He doesn't comment. He doesn't post any of my comments. Only Jerry's comments. I don't have any worthy comments to post, I guess. But
Go that far.
I'm just giving him a hard time.
Yeah, but yeah, he's definitely the president of my fan club.
Yes,
Absolutely.
yes.
So great guy. I hope to meet him one of these days. Yeah, great trend follower.
Hopefully he gets to the States because I don't think you're going to Russia.
That's right.
I don't know. Yeah,
That's right.
yeah. You got to come over here, pal. Or maybe somewhere in the middle. Somewhere. Western Europe, something.
Yeah.
But in the safe zone. But all right. You said you had some tweets you want to read, and we could talk about today.
Yeah. Yeah. I was pretty kind of, I don't know, rude on Twitter this weekend. Or
Love it.
another thing you can say when you read really kind of off the wall, rude tweets, you can say, "What are you drinking?" That's an appropriate question usually.
I usually
Uh,
look at the timestamp. If it's
that's right.
if it's post 5 p.m., 6 p.m. All right, there's probably a bottle of red open somewhere
Yeah.
near Jerry.
Yeah. There was a good podcast, RCM. I love their podcast. And I think the host is pretty fantastic. I've been on that podcast before. Jeff.
Oh,
Jeff's a great guy.
Jeff,
He's super
Jeff
smart.
Malik.
Yeah.
Yeah.
Super smart. Funny. He's very funny too. And he had Moritz on, and Moritz was telling him how he trades and what he's interested in. And he was talking, and the first thing he talked about that I tweeted was, heating oil and crude, they're correlated until they're not. Kansas City wheat, Chicago wheat are correlated, and then all of a sudden they're not. And so he's just trying to say, hey, correlation and diversification plays a role in that you want to trade markets that are not always moving together, but sometimes a lot of these markets do move together, but we're in it for the big outlier, and one of them can have a big outlier and the other one won't, and then they'll go back to being 90% correlated.
Right.
So that's really kind of confusing, I think, to people. You have more markets that we trade more markets than anyone else. You must really be concerned with diversification and correlation. Not too much, a little bit. It's mostly taking small bets and then trying to find that outlier that can come at any point in time in a market that's highly correlated. Yeah, so I think that was the first point that Moritz was trying to make. Do you run into that a lot? People like being confused as to why we trade so many markets when a lot of them are correlated, and why we don't maybe weight the markets in a more precise manner?
I think more so for traders with not a lot of money to manage. I had this. I thought about this when I first started too, and I can we can use this actually as a time to address a question we got last week on Twitter in our DMs, Martin, and he he was asking, yeah, how we manage to handle trading markets with not a lot of money. Which ones do you choose? Do you watch them all and then pick the strongest one type of thing? There's that school of thought. I've never done that, but I know there are some people that go that way. But I remember when I first started, I traded 11 markets, and the metal that I chose was gold. And gold broke out, that had its big run in the summer of 2011, but silver, if anyone remembers, and go look at the chart, went bonkers in the spring. And I remember sitting there like, God, this is fucking stupid. Why am I sitting here with this one that's not doing much? It's going up okay, and this is a good like heating oil, crude oil example. Like one's going up okay, but silver is going to the moon, and I'm sitting there not in it. And I'm like, oh, should I think about this? Should I think about this ranking thing? But the thing with that is that it just promotes more and more trading, and the more and more I think, the more and more rules you have on selection in real time, it just becomes like another short term breakout type of rule where you just start getting in and out of things much more often based on its ranking. And I don't I think it's I don't know. I mean, I've tested it. It seems okay, but I don't know. For me, it wasn't the right move. But no, mostly today, my investors don't care. They don't care. All they really care about is that net performance number at the end of the month, end of the quarter, end of the year. And if we're doing well, they don't care. But um, yeah, that is a decision that I think small traders especially need to make. Is on, are you going to go fixed portfolio? Or are you going to go variable portfolio? You're going to want to like have sector allocate a sector exposure, but your sector exposure depends on the strength of the trends within the markets in each sector type of thing. Um, I don't know if there's a right answer for you know uh, for the professor on the test, but I think for me it was always fixed. It's going fixed, and just being okay with, hey, you might have picked the wrong one, you might have picked the right one, but if you stick with this, it's in over time. I think you'd be better off than switching back and forth type of thing. I
Oh,
don't
well,
know.
I'm glad I'm here because there's definitely a right and wrong answer.
Here we go.
Oh yeah, yeah. I mean, there's only one right answer, and that is a fixed portfolio. For systematic trend following, you have to have a fixed portfolio.
Hmm.
I do agree with you, though, that a small trader who doesn't have enough cash or AUM to spread it out over every currency, every commodity, every stock, and every bond, yeah, they're going to have to pick and choose, and they're going to get caught in that situation. I think if it's a discretionary thing where you say, oh God, I picked the wrong one, I should have picked gold. I agree that it should be a fixed portfolio with hundreds of markets, but I can't finance that right now.
Yeah.
I agree if you do this discretionary move where you say, And this happened in 1987 as well, almost just like how you described it. Silver doubled or tripled, and gold kind of sat there.
Yeah.
And it's going to happen again. And it could be the opposite, gold versus silver. So it's dangerous to not take those trades, but sometimes you can't take them. And so if you want to pull a discretionary move and get out of your gold and then get into the silver, that's tough. Yeah, you can do that. And maybe in that situation in 1987, that would have worked better. But sometimes it's going to switch back. And you're like, oh, crap. Now the one I just
Right.
got into, now it's the weakest. So enough with that.
Yep.
And then it switches again, and you don't pull the trigger, and of course you get screwed. So it's very difficult. But I do think people, I think a fixed portfolio of markets never changing is very counterintuitive. And I don't even know if most trend followers go with that. I've never heard them say that specifically. But it basically is a situation where not only do you want to trade the systems consistently in a disciplined manner and take all the trades, you need to take all the trades, which means you need to take the trades of all the markets in your portfolio and not take a trade because it's not in your portfolio right now. I can't afford it. My money management says I can't buy the British pound. I'd like to. I bought it the last 10 times and it lost money. What do you think is going to happen on the 11th time? Whatever reason you may have in your head, it doesn't matter what the reason is. More than likely, you're not going to take the British pound. Totally legitimate reasons, let's say, in some regard. And so then you're going to miss the big, huge trend. And that happens, and it will happen. And that's why it absolutely matters that you set up your money management to be able to take all the trades in the portfolio. And then hopefully over time you get successful and you can trade more money and you can include more markets in the portfolio. So that's Total Trading 101, 1983. So yeah, not going to back off that one.
Didn't
Sorry to
think you would.
overwhelm you.
I didn't think you would. So, Martin, I hope that answers your question. I think I just made the choice to go with 11. A couple here, a couple there from different areas, and so be it. I remember telling you this, Jerry, about this very thing. I said, yeah, I think I was stupid. Maybe not picking, maybe not having some sort of ranking where I was in silver, I ditched gold, no exposure to gold, and then when it flipped, ditch silver and then into gold. You said no. Don't and don't beat yourself up over that because of all the issues you just mentioned. And I think I saved that email. That was back. That was back maybe 5 years ago.
But
I
just
remember
let
always
people
thinking about
know,
that. I never acted on it. I never acted on the ranking thing. I just always thought about it because it's probably this intuitive. Well, let's say not intuitive. This human stupid thing we want to indulge. We want to always avoid the loser or the one that's not moving as much. We always want to be picking. It's like back to that picking. We want to be right. We want to have that stock picking mentality and avoid all the pain and just be in the right one all the time. I don't think it's even possible long term to even pull that off consistently enough. And no, and then probably when you get big, you can't even scale it. Like, what are you going to be in? Like all in on sugar? Like, no fucking way. You just can't. You can't have all this money in one or two markets. You're going to have to spread it out.
yeah, then you can spread it out more, the more assets you get. And that's just the way
Yeah.
that's the way it is. And then, you're going to be sitting there with a great position, crude only, gold only, and you're going to make a ton of money one of these days, and it's going to be the one that moves. You just got to maintain consistency and discipline. And it's okay to kick a market out, I guess, if it's really illiquid or for whatever reason you want to, but just don't trade it anymore. Look, you're building up these losses. You're losing all the time. Then you've got to play in that market because one of these days, all the losses are paying for that big outlier that you're going to see one of these days. And then you're there and you get it. Cocoa, sugar,
Right.
orange juice. Then you get it and then you're, okay. So, but look, honestly, what do you think's going to happen if for whatever reason the market doesn't know and doesn't really care? If you don't take that 11th trade, it's going to be a big trend. And that's, you're playing the odds, you're being consistent with the systems and the markets, and they're equally as important. But, just to let people know, you haven't always been wrong. Sometimes you're actually right, and I have to later come to you and say, oh, yeah, you were right about that. I messed up. You've kept me on the straight and narrow over the past 4 or 5 years. Every now and then, I'm not perfect. I have these bad thoughts.
Yeah, you're probably ahead of me on the score sheet on that one. You're probably, um, I can remember a couple times that I was like, nah, I wouldn't do that. Nah, that's terrible. That
But I
I
would
don't know where you
admit
got
that
that idea, but
when I
get rid of
changed
that.
back, I admitted that. I'm like, oh
You do.
yeah,
You're very
yeah,
good. Very good with
oh
that. Very
yeah,
good.
yeah. I like to beat myself up. You're like, don't worry about it. I'm like, no, it's horrible. I gotta really punish myself here. So, anyways,
All I know
Maritz,
when I get an email or text at 2 a.m. or something like, oh, this guy, he's reeling, he's spiraling, he's all broken up over this. Like, just go to
well,
sleep.
yeah, well,
My
I got
phone
a
lights
little
up,
up,
and my wife is like, what does he want now?
I got a little uptight as Maritz's podcast with Jeff went on because Jeff was saying some stuff I didn't agree with.
Uh-oh.
Yeah,
Do you
here it
want to
goes.
get into that, or do you want to?
Yeah, I want to. Oh, absolutely. I
Okay.
said I love Jeff, right? Yeah.
Yeah.
You see, I've set that up multiple times. How much I love, how smart he is.
We
Okay.
love you, Jeff, but all right, now we're going to crush you.
Okay. Here's Jeff. Over the last 20 years, more institutions have come into the trend following space and hated the trend following profile. I agree. They pushed the bigger CTAs to vol target and have overlay filters that reduce the profit givebacks, the OTE giveback, open trade equity giveback. And I put in
Yes.
parentheses and profits. Moritz goes, I'm
Right.
sorry for them. I'm happy for me. I thought that was pretty funny.
Wow.
And so then Jeff says, he starts getting in big trouble here. For selling the track record, I don't think it works because you have these large drawdowns, these large gift back, and it isn't appealing to people. And then it was kind of like, I was like, we do these things because it's more robust, it makes more money. You can trade a bit smaller if you let profits run more and don't get out on the way up versus with
Mm-hmm.
vol management or correlation management. Your
Mm-hmm.
losses are smaller, maybe a tad smaller. And it's not like we're masochists trying to or make a point. Look how tough I am. I sit there and I give all this money back. We just do it because it works, and the back test says it works. And I'm not going to listen to these clients telling me what they prefer and don't prefer. How nuts is that? We do it because it works better, and it's safer, and it's more robust. And I think clients, like you said, they like the money, and you're going to have a better chance of making decent money if you let profits run and sit with the volatility and some of the open profits, not in the losses. The losses are going to be cut short. And I think bottom line, I don't think you can blame this on clients or institutions. They get fed a line by these larger CTAs who tell them, yep, you can have your cake and eat it too. We can get all the benefits of trend following, wipe out a lot of this volatility, and have a smoother return, and there's no cost to it. And also, since it's so complex, we have to charge more, 2 and 20, 1 and 20, whatever. So I think that helps as well. It really justifies, complexity has a tendency to justify the fees. What do you think?
Yes, I do. Well, one, I do believe that marketing drives a lot of the business decisions, even at these smart funds, and they're business people. They're really good at it, and they know what sells, and they know what people want, and they're like, all right, how can we optimize for what we want? What they want, and that's usually Sharpe. It's usually some sort of risk adjusted ratio, return ratio that just feels really good, and I understand. And but I think we don't optimize for anything. Maybe survival. It's probably survival is what we optimize for, and we're like, hey, we don't really know what kind of road we're going to be facing here. I'm going to admit that up front, but we're going to get through it, and we're probably going to make a lot of money doing it. But I can't tell you when we're going to do well, when we're not, what type of road we're going to be on the next 10, 24 months, or 12, 24 months, or something like that. So there's this, like, really? Like, why not? Like, you're not doing any work on this? Like, what's your analysis telling you? What kind of environment we going in? Like, oh, we don't know. We don't even care. Um, and that is just not those aren't answers that people like. They want to know. They want to know that you're on the cutting edge of doing some sort of analysis, whether it's, um, some sort of like data mining or new AI, or you have some really smart fundamental people on staff that know this sector, know this company, know this industry well. But again, we just don't do that because we're not optimizing for this view that we have, this thing, this new environment, this new market regime that we see or something. Uh, we're just sitting there, staying alive, grinding it out. Like, it's just a grind, and it's just not a real fun thing to invest in or talk about. But I think we make a mistake, and I do this too. But and I think someone who does it really well is Buffett or Berkshire in general, and that they have their annual report. On the top, they have every year's return for Berkshire, and then the S&P, and that they don't have this fucking alphabet soup of stats. Who cares about the stats? The number return is what we care about. It's the same as sports. What is the score? Oh, but we had the most passing yards. Did you win the fucking game or not? I don't stop talking about all this other stuff. It doesn't matter. But I think people they lead with those things. Yeah, we lost. We're not doing as well, but look, we got some good other stats. So don't sleep on those, because those could foreshadow some really good, end result in the future, which may or may not be true. But it's like the more and more stats you can show, the more and more of a positive spin you can put on your own product.
So you're saying
And
you don't think Buffett uses Sharpe, and
no, I don't think he gives
do you
two
think
fucks about
Buffett, when he
Sharpe.
gets a good company, a good investment, do you think he vol manages or correlation manages it?
No,
Yeah.
no,
See, this is how
it's
nuts
like a
he's going.
childish thing. He would
That's
him
such
and
a
him and Munger would probably just
yeah,
laugh at you
yeah,
like this.
yeah,
We're here to make money. That,
yeah,
don't be confused about what we're doing here.
yeah.
No.
And I was noticing the other day. I was thinking about this the other day when I read an article about hedge funds going out and finding bank stocks to short. And I was thinking, back to the fixed universe. Are you short bank stocks? Yeah, I have a few in my fixed portfolio, but yeah, so maybe I'm short them, maybe I'm not. But we're not going out. Such a different game we play.
Yeah, we're making ourselves like
I had
available.
another, I had another friend. He had an interesting comment on this, cutting profits short. I like this guy too. He's a good friend. But but everyone exits a position, parentheses, cuts profit short. It's just a matter of different exit conditions, which is not, come on, man, come on. What we're talking about here is trend following, and we're talking about getting out of a position at the all time highs or near the highs based upon something other than trend reversal, yes,
Yes.
everyone has different exit conditions, but exiting a position, sometimes when I get out of a position after a big drawdown, I'm not cutting my profit short in the way that if I get out at the
No.
all-time high, that sucker usually may keep going. We don't want to predict how far it can go.
Right. I mean, yeah, that's ABCs to me. Um, Getting out of what's doing well right now. Sugar, you know, getting out of sugar right now, no, because we're waiting for 100-day low or something like that, some real meaningful reversal before we do that. Because it, through the uptrend, it makes a lot of 5, 10, 20-day lows all the time, and then right back up at some point. But uh, to get out when it makes a new 100-day high, whatever day high, like that that's not an exit condition to us because we're trend traders. We're waiting for the trend to reverse change course before we actually exit. We're not exiting just because we've made enough money. This looks good. Like, it's running into an old top where it made 5 years ago. Could be resistance here. Let's sell some. Like, no, no. That's all chart porn. It's all like predictive chart porn. Um, it, it's just not. It's not sustainable. There's no system there, and that alone is enough for it to not work over the long run. Will it work on this trade? Maybe. Maybe you get lucky. Maybe that is the top or something. But no, we're waiting for real meaningful reversal. Like, all right, this is done. We're getting out. Not.
Predictive chart porn. I love that.
It, that's all it is.
Yeah, I
A
haven't
lot of
heard
these
that.
chartists, I think, are fundamentalists using charts. They just want to predict. They want to say this pattern looks like that pattern from the past. This is what's going to happen next. Like, no. Um, and I think it's important to if you look at charts, you better look at the same chart with the same scale forever, because looking at different charts on different providers, if you make your own charts, they all have different scales and they look different. And some are log, some are linear, and some look more like a linear will look more bubbly than a log chart, and that plays with your head too. You can't. So that's why looking at charts is. I used to look at a lot of charts just to see what's going on, but it would excite all these feelings like, oh shit, that looks a little toppy. This looks spiky, and it does get you thinking, oh, should I take some off? Like all these silly, stupid thoughts that you get. And yeah, I remember, I think it was Bitcoin. I was looking at that the Bitcoin chart from years ago. The log chart looked like, oh yeah, this has got a lot more room. And then the linear chart was like, oh no, this trend's over, because it looked like it's just complete
Yeah, I don't.
parabolic.
Yeah, I wouldn't ever look at charts to decide what to do.
Yeah,
They're kind of misinformation, and yeah. So, and basically, like I said, the reason we do what we do is it's based upon the back test, and you can't make more money by adding things to a breakout entry exit stop loss system. You don't make more money with correlation adjustments and with volatility adjustments unless you figure out a way to include the volatility of your best trades that increases your risk. That's what they have to do. And then if you can have that philosophy that yes, when I'm making lots of money, my risk is going up, then you can add all of that stuff in an attempt to smooth things out and take profits off the table, and then you get into the risk adjusted, quote unquote, returns versus using drawdown of your capital account and your losses, the losing trades, and putting that in there as your real risk. And so they have to do something porn. I don't know what kind of porn that is, but it is not it is not good classic trend following. Yeah, so that's the whole point. Is it's based on the back test, not based on charts, not based on feeling, not based upon some erroneous use of volatility and Sharpe that's unnecessary. But so this is what got me going, and it's just this eternal issue because how can you not have this to be an issue when the whole cliche of trend following is take small losses and let profits run, and then you don't let profits run in a meaningful way, and then you still get to call yourself trend following. That's not. It's not fair. It's not right.
These are, this is what happens when the marketing takes over. Everything becomes gray definitions. No one really knows what it means. The definition itself loses its meaning. What is trend following now? Oh
Oh,
God, it's like,
exactly. And then their slogan, the perfect slogan for this whole morass is there's no right answer. Perfect. This is
right,
2023. This is what everybody's slogan essentially is. There's no right answer. I do my thing, you do your thing. It doesn't matter. You're enjoying what you do. I'm enjoying what I do. There's no right answer. This is maybe I never heard that when I was in school or when I was growing up, and it's not true. But this is the ultimate. You can do what you want to do, and there's no right answer. But there is right answers, and that's how life works. There's right answers and there's wrong answers, and I'm always trying to find better answers. I don't have all the right answers. I'm not giving up. I'm not stopping with improving and getting better answers. But I know that I'm on the phone. I know that there are some people out there that have better answers than me, and I'm hoping before I leave to improve as well.
sure. I think if people want to indulge in that and say, there's no right answer, like, okay, well, uh, I'm a born competitor. I'm gonna need to compare. If we're in the same business, I'm gonna need to compare myself to you in some way. So, what's the way? Okay, the return. So let's compare that. And all right, your way is maybe better than mine because you got a better return or something, or it's not, and I got it better. Whatever. But for everyone to, yeah, operate in their own little fantasy world of I'm doing it and this is okay. I got, my Sharpe is better than yours. Yeah, but I only care about return. So I got you beat there. Um, so maybe do you care about that? Like some people don't care about it. Like we were saying before about some of the other big funds. Like they don't, they're all right with smaller return, a lower return. But if they got that higher Sharpe than you since inception over the last 18 months, 30 months, whatever, all right, then their way is better than yours. So so if we had just a way to compare ourselves and we always use that, then all right, do it your way. Your way's right. But here's the score, and that's the score. Um,
Well, I think
you're still behind.
Richard's idea, my friend on Twitter, his idea of long-term track record. It's basically staying alive because all the formulas and all the
Yep.
equations, they all should have a real life relevance to the possibility of fatal drawdowns or losing too much of your money, drastic capital reduction. So by the mere fact that you can stay alive for 20, 30, 40 years and make decent sums is the best indication. But, it takes 20 or 30 or 40 years. And so no one
Yeah.
is going to say, oh, well, I'm waiting on this guy to see how good he is. In 30 years, if he's still around, I'll invest in him. But that's
Right.
the
Right.
best metric. Did you survive?
I mean,
Trend following
I've
CTAs, the ones who don't even trade anymore, they have long track records, long, successful track records. Henry, Dunn, Chesapeake, a lot of others as well have long track records of surviving and making decent sums. And that right there should give people pause to get too far away from the classic trend following style, but
Yeah.
you probably can't max out your revenue and your AUM telling people to eat more broccoli.
No. No. It's not what sells. It's not going to be a new 90-day way to get in shape for summer.
That's right.
Do all the things that you know is true, but you don't really want to talk about, like, you got to eat right, you got to get to bed, no drinking, no drugs, in the gym, exercise, whatever. Like, yeah, really? That's it? I knew that already. You got anything else? No, because that's what fucking works. What do I tell you? Like, why are we talking? We're just, let's not talk anymore. Let's just do it.
Right.
But that's, again, it's just, why do it when we can just try it? I'm bored. Let's try something else. I'm bored. Let's try something else. That is just much more fun and for people because you can have a way of you have an excuse built in for your failure because you're not going to get anywhere with doing anything for a short amount of time. Then you can say, that program wasn't for me. Wasn't for me. I don't know. Didn't like it. I didn't feel great. It's like, you think I fucking feel great? I've been training for 20 years. Like, you think I want to do leg day? You think I want to do, heavy days and then be achy? Like, no, but it's what you got to do. You got to stay strong, and this is not always fun, but you got to do it. You got to be like an adult and do it because this is going to put me in the spot to be healthy for a long, long time and well into old age where I can still move. And same with trend following, like same with managing your money as well. This is not a program jumping thing. This is just, as we said last time, chop wood, carry water. It's just keep doing it. There's a lot of strength in that.
Tremendous, tremendous strength. All right. Well, I'm going to move on to my next podcast. What do you think?
Popular guy.
Maybe I should go upstairs and change my shirt so no one can tell. Yeah, I think I should.
Yeah, put on a. No, you gotta no Tampa. I think you're doing with Clint, and he's a Hurricanes fan, so.
Yeah. Bummer.
Bummer. Yeah. Good for him, but
Yeah.
not for us.
Yeah.
Okay.
All right.
Nice
See you
little
Friday.
sesh. See you Friday. Thank you, everybody. Talk to you soon. Bye.
Bye now.